What's up, traders? Andrew O'Connell here with Pristine Capital. Just another day in this summer of love in the markets. Let's dive into all the details. S&P 500 finished the day up 0.41%. We have the NASDAQ QQQ finishing up 0.81%. IWM small caps were a laggard, only up 0.35%. Our dogs of the Dow were up 0.46%. And our ARK Innovation ETF was also a laggard, only up 0.35%. We did have pretty much all of these indices close towards the upper end of their day's range, and we did have a slight volatility expansion across the board, which is a negative divergence. IWM small caps had 62% advancers, and overall up volume in the market was only 46.8%. So it is always noteworthy whenever all the indices rally, but then you look at the up volume in the total market, and it's less than 50%, that's always, in my view, sort of a negative divergence as well. And it's not really to say like, oh my gosh, something bad is going to happen, but it just means that if you're an active trader, what you're experiencing might be a little bit different than what we're seeing in these indices, because a lot of those individual names that are just in the wild in the market, the majority of those were actually down today. Trend model remains at a +1. And let's take a look at our heat map. So what happened? Energy was pretty weak this morning. There were some headlines hitting the tape that we had some weak industrial production data out of China. They were doing some more stimulus, whatever. To be honest, I think it was a little bit overblown, but we did see that crude was pretty weak after that data out of China. So all these energy stocks were relative laggards today. Our big winners, we did have Nvidia plus 1.73%, and we also had Tesla, which was our big winner of the day, up 3.1%. This is so hilarious. Like Elon Musk, who's the CEO, just sold like $7 billion worth of shares. And the stock declined like literally as he was selling it. Like I'm sure that was the sell pressure that drove the stock down. But then like immediately once he was done, then the stock just like jumped right back. And I think this stock is running into its stock split. We also had a pretty strong day from Disney as well. I know some members of our group traded that stock, and that one's definitely looking pretty solid. Sectors. Now, we did have a mixed tape. You can see energy was down, financials were slightly down, fintech was slightly down, solar energy. So look at this, our top three momentum areas in the market, are blockchain, fintech, and solar energy. 2 out of 3 of those groups were down today. So that really tells me like the rally's not being driven and propelled by the leading areas in the market. It's being driven and propelled by other areas. So what was driving it? We see the YOLO Cannabis ETF was up 2.6%. What else were the big winners for today? Yeah, YOLO Cannabis. Consumer staples were up 0.99%. That's another big relative winner. And biotech was up 1.19%. That is a pretty risk-on area of the market. And that's it. And then KWEB, China Internets were up 0.84%. Style factors. Best performing style factor on the board was the growth style factor up 0.59%. And then following that, we did have small cap value, and we did have defensive stocks that were leading this market. Oh wait, and actually minimum volatility, MinVol, was up 0.71%. That was the leader. So this is another like mini tell. MinVol is an asset type that investors would want to enter if they think there's going to be a bout of volatility. Hence MinVol. So that's not really like a super risk-on configuration to see under the hood. And now let's take a look at these markets. We'll take a look at the S&P 500. VIX, since we already have this pulled up, take a look at what's going on with the VIX. This thing, look what they did to my boy. It's just getting completely washed out. And you can see it's not really making new lower lows anymore, but it's just kind of languishing with a big juicy red candle. Let's take a look at the S&P. S&P 500 ended up finishing out the day above this 5-day EMA. We are getting so close to that 200-day simple moving average. Keep in mind, we do have options expiration that is coming up this Friday. We tend to have some wonky price action into OPEX. We have this 200-day right above us, and we have the 10-day EMA down here at 41.91, spot 18. And then we got the 20-day simple moving average. Who's even thinking about that? All the way down here at around like 4,100, but it is moving up pretty quickly. Let's take a quick heat check on our NASDAQ. And NASDAQ is approaching a VPOC from below. So we do have a Virgin point of control up here at just around 14,000. That also coincides with the 200-day simple moving average. And our Russell 2000, I'm currently short the Russell, and I actually entered into a short S&P 500 position today as well. Russell 2000 finished up above this 200-day simple moving average, still advancing in this, I don't want to say parabolic fashion, but the angle of ascent is steepening. And then the Dow Jones is also closing above that 200-day simple moving average. Now, in terms of trades, we do have our proprietary overheat model, and that did trigger into the bell today. And that is a very high level signal, and the win rate is very good. That when this overheat model triggers, we do want to make sure that we are paring back our exposure. So I did not only that, I pared back my exposure. I sold off my Twitter. This is a merger arbitrage trade. Sold it off for a very baby winner at 45. Sold it at 45.63. I'd paid 44.45. As put here, the VVIX risk signal is going to trigger into the bell. I might get to buy this stock cheaper at a later date. So yeah, it's not like the thesis was broken or anything like that. It's just, hey, let's take back some risk. And then what else did we do? Okay, so let me pull up these options trades. Did I pull the wrong trades? Oh my gosh, I did. Let's see. Sorry about that. Oh my gosh, and I did do an interview today with Dale Pinkert from Forex Analytics, and that was a lot of fun, so definitely check that out. Honestly, like, I talked about my overheat model in that meeting, and then he like tweeted it out, and then I went on a Twitter space later, I said the same thing, and like then everyone was now saying like, oh yeah, I think I'm getting more negative on the market. So now I'm like, oh shoot, this signal really has to work or else I'm going to look like an idiot. But it is what it is. So let's see. I do have confidence in the process. I know that not every signal is a silver bullet, but I like playing the probabilities, and I think the probabilities are in our favor. So what did we do? I got long some AMC, October 21st, 22 strike puts for $4.90. Then I also took some SPY October calls. I got the October 21st, 428 puts, and those are, 3-star trade. And then I also got long the Hut 8 Mining, September 16th, 3.5 strike puts for 49 cents. Now, Hut 8 Mining was my largest position by far, and I sold out of Hut 8 Mining on Friday. Now, this stock still looks great, but it's kind of gone parabolic, and I just noticed cryptocurrency has been kind of weak the past couple days, and this stock just keeps ripping to the upside. And there's risk all the way down to this 10-day EMA, all the way down to 283. So I just figured, hey, let me put a hedge on that name because I'm pretty familiar with how it's been trading. But yeah, I got short this one. I got short SPY. I also got short AMC. So let's see if the apes come after me. At some point, my presence online, like on Twitter and stuff, it's going to get too big to where like I can't really announce anything that I'm long or short anymore. Because like I do fear, like there was the one time I tried to accumulate a stock. I mentioned it on Twitter and like everyone just started buying the stock and it kind of annoyed me. And then same thing with AMC. Again, I don't think I'm big enough where people are going to like hunt me down. But do just want to be cognizant that like, yeah, at some point we're probably going to have to stop sharing this stuff in public. It'll just be for Pristine Capital members. But yeah, AMC did put in this hammer candle. It did put in a green candle. So we'll have to see. Maybe there is some more room for AMC. But I am currently long some put options. So yeah, with the VVIX risk model having triggered, my goal for the next couple days really is to just lay low and see if the signal actually works. I don't want to get too crazy, like just continuing to pile in shorts, because if I'm wrong, I don't want to dig myself into a hole. But I do feel much more comfortable now being primarily in cash and then having some hedges on the books. With that said, that about does it for this market recap video. Thanks so much for tuning in, and we will see you all next time.